for them in order to expand to Silicon Valley. And besides Alfredo, we also have Chris Barry with us. He has vast experience as chief executive officers in different companies with demonstrated history in working with in international trade and development industry. His skills are in business process, business planning, international business, customer relationship, and go-to-market strategies. So as you can see, we have two great speakers that, of course, are going to help you understand better the ecosystem and what are the opportunities for you and your companies. We are going to have two main topics today. Of course, this session is going to be in English, as Silicon Valley, as you understand, the language is English. And of course, for all of you, it's very important to know this language in order to scale to the US. So as I was saying, we are going to have two topics today. First, we're going to start with the trends and opportunities in Silicon Valley, so you can have an overview of the opportunities of this market, and of course, also understanding what are the changes and difficulties or maybe barriers, challenges that this ecosystem is facing due to COVID, and what are, of course, the opportunities that we have in this market besides COVID. And then we're going to move to Chris, who is going to share with us more information about how to develop a global growth mindset for your company. For many startups, the survival depends sometimes on the ability to scale. And in that sense, sometimes you need to achieve certain size in order to scale your company the right way and in a way that it's going to actually bring the results that you expect. That's why we believe that one of the key important facts that you need to have in order to scale globally is to have a global growth mindset, and that is going to that is what Chris is going to share with us today, how to have a global growth mindset and global scaling mindset that it will help you in order to scale your company to new markets. So with that, I want to first thank again everyone for joining, and especially thank Chris and Alfredo for being with us today. I know that you are people that have a very tight agenda, so we really appreciate you joining us today and taking the time to tell a little bit about the landscape of Silicon Valley and the opportunities for this market for Chilean companies that want to expand to the US. So Alfredo, Chris, again, thank you so much. Thank you everyone for joining, and please, for all the participants, please have your mics on mute in order to let the speakers have a good session and, of course, bring you all the information that they have for you. Thank you again, Alfredo and Chris. I'll leave the mic to you.
All right, thank you so much, Sophia, and good morning or good afternoon to everyone in Chile. It's a real pleasure to meet you all. It's an honor to have this presentation. Normally, we like to be in your home country to deliver these sessions, but it's been amazing how we've all adapted to the new COVID way of doing business. And obviously, there are some big disadvantages, but you know what? There's a lot of really cool things that are possible because of the COVID crisis. So, and a lot of that is happening in Silicon Valley. So there's a lot of good news. The world is actually becoming a little smaller, thanks to COVID. So we'll talk more about that. So as Sophia said, I'm going to cover a little bit about trends and opportunities, but also the mindset of Silicon Valley. And even though you cannot physically travel here today, you know, the power of the region is really about the network and the mindset. It is very little to do with, you know, just the destination, okay? So I'm gonna share my screen, and really the topic is really about why Silicon Valley is the best place to grow your company. And you can still do that in a COVID world. I also wanted to mention that we are going to do a Q&A at the end, okay? So if you have some burning questions, you can put them in the chat window, but we would prefer to do it at the end, and this way you can unmute yourself. Chris and I are wingmen for each other. So Chris, if for some reason my internet hicks up, just cut in and take over, and I'll do the same for you. Overall, we've been doing this for 5 months and we've had very few problems. So let's hope nothing happens with you. A little bit of background about our organization. As Sophia said, we are one of the longest standing accelerators in Silicon Valley that's focused on helping foreign startups to enter the US market and the global market now through Silicon Valley. And both Chris and I have a background in doing business in many different countries. I've had 3 startups in my career. Chris has had more, and a lot of success stories and failures along the way. And we, through our experiences, we want to help others to learn from some of the things we've gone through and actually make it a little bit easier for people that want to do business on a global basis. I'm actually not originally from the United States. I'm a Canadian citizen still, but I'm living in Silicon Valley. And I've had the whole cross-border expansion experience myself several times. Even though Canada is physically connected to the United States, it's a world of different cultures. We have an amazing team, further introducing ourselves. We have 2 people in Europe, in South Asia, who actually have some presence in Latin America, just Colombia. And Chris has had the pleasure of being in Chile. He'll talk more about his experiences a little bit later. But we also have some phenomenal advisors that have been with us every step of the journey as we design accelerator programs that help foreign startups to do business on this amazing part of the world. So we have, people from like Ken Singer from UC Berkeley Socharja Center for Entrepreneurship, Steve Edelman, who runs the Wharton Accelerator, Wharton Business School. He's also the Wharton Business Angel chapter head in Silicon Valley. We have one of the biggest angel investor groups called the Band of Angels. Ron Wiseman heads the software group. We have Gail Gannon, who heads a lot in the life sciences section and is a partner at Wave Edge Capital investment banking firm. We also have some great VCs, such as Bill Reichert from Pegasus Tech Ventures and Garage Technology Ventures. And then we have some, futurists on our team, like Amy Peck, who talks a lot about virtual reality and future tech, and also a huge advocate of women in tech. So we can't do what we do without this amazing team that we have. And before I get into the meat of the presentation, I also wanted to give you some background on our performance, the performance of our alumni. Okay, so we have accepted, just over 1,200 companies into our programs in the last 10 years. And we're quite pleased to say that, 42%, nearly half, have been successful in getting customers and POCs in Silicon Valley. And, we're really pleased with that track record. We only learned these numbers in the last few months because we've had a little bit of extra time because of the COVID crisis. We're also delighted to say that, 18% of the companies, 208 of them, have been successful in raising capital in total value of nearly $1.5 billion US. And 16 of our alumni have been acquired at a value of just over $1 billion. We have run 156 different accelerator programs in 37 different countries. We would love to do something with Chile. And after this session, Sophia, you and I are going to talk a little bit more. We hope that some of your companies will be on this leaderboard, okay, maybe next year. Okay, so I'm going to move over to the main part of the presentation. I wanted to talk about, Silicon Valley is, of course, a household name. It is the center for innovation all over the world. Chris and I live it and eat it and sleep it. And sometimes we're so close to, what we call drinking from the Kool-Aid. We are, disciples of all the things wonderful about Silicon Valley. We need to sometimes get third-party validation. So a couple of years ago, the World Economic Forum did a study on all the global tech ecosystems and compared Silicon Valley against all the other regions of the world. And we were quite surprised about the results. If you think about Silicon Valley is a region, only about you know, 120 square kilometers, 7 million people. It's pretty small. And the World Economic Forum did a comparison of what they called 8 pillars of success. And remarkably, Silicon Valley won in all 8 categories in every other region of the world. And it's quite astounding to know that this part of the world is the real innovation center of the world. And because of that, we are no longer positioning Silicon Valley as an access gateway to the US market. It's really the access to the global market. And even during the times of COVID, we can see that it is what you want to leverage is the network, not the destination, okay? So you may never travel to Silicon Valley and have access to a global market. And if I go back to these numbers here that I shared earlier, out of the 528 companies that successfully got customers, only 91 of them have set up an office in the United States, not even Silicon Valley, okay? So less than 1/5 of those companies that got customers have an office in the United States. So this proves that everybody can use Silicon Valley as a tool for success on a global scale. All right, so let's talk about what are the things that are happening and have happened in Silicon Valley that make it so important, okay? So it is home to the largest amount of unicorn. These are companies that are worth more than $1 billion, okay? And ever since 2003, there has been this incredible growth of the number of unicorns in Silicon Valley. Now, the numbers are always updating, but the purpose of this slide is to tell you how Silicon Valley compares to other big ecosystems in the world. The United States is #1, and if you look at the breakdown in the United States of the big ecosystems, including New York and Boston, et cetera, Silicon Valley still dominates with the largest number of unicorns in comparison to other parts of the world. There's a great map infographic that you can download. It's kind of hard to read here, but as you go, it's a timeline, and you can tell some familiar company names. This goes up to the end of 2019. Okay, so we're going to make a copy of this presentation available to everybody after the session, in addition to a recording. Chrissy, you're recording, yes?
Yes, we're recording,
Yes.
Alfredo.
Okay, awesome, great. Nothing worse than forgetting to hit the record button. So before I go through this list, I wanted to mention that, you know, as Sophia highlighted, the COVID crisis has introduced a whole bunch of opportunities. You know, it used to be that it was kind of difficult to get a meeting with some of the big corporate players in Silicon Valley. And now it's a lot easier. They're all, you know, working from home or working in their office. They're not on airplanes. They're not even driving to their offices. And they're not participating in conferences in other parts of the world. So they're actually more accessible, right? It used to be 5 or 6 emails and phone calls to get a meeting. No. Now that can be done with a couple of emails, and they accept the offer. I would like to ask, please, if you are participating in this session, to mute yourself. Thank you very much. Yeah, and then on the VC community, if we look at the first 8 weeks of the COVID crisis, there was a lot of panic. There was a lot of dumping of, you know, companies that were not performing well. And now, basically, the entire venture capital and angel investor community has adapted to the new reality, and they're still doing deals. Now, some of the bigger deals are being deferred to next year, but a lot of the smaller deals and the seed deals are still happening via Zoom, okay? So we'll talk more about that in a moment. So there are 4 main grow a company, and is the access to the kinds of funding available. Secondly, it's access to the largest amount of early adopter customers, and that's largely due to the last 6 years surge of multinational corporations that have set up an innovation office here. And we'll talk more about that.
Alfredo, could you kill your video because you're being choppy and it's your uplink that's the problem. So just stop your video.
Okay. All right. Sorry about that, folks. Thanks for the intervention, Chris. Thirdly, it's the mindset of the region. Mindset is very unique compared to other cultures around the world. And then lastly, it's the quality of mentors and advisors that are available to us in a very short distance. Okay, so let's dive in a little deeper here. We talk about funding. We have the highest concentration capital. So risk capital, what do we mean by that? It's a way of thinking from the investment community here, very different than traditional investment mindsets where most investors made their money in real estate in the past. Real estate is relatively easy to predict risk, where investing in innovation is actually incredibly risky. And most investors in Silicon Valley are very comfortable with the idea that maybe only 1 out of 20 investments will make them piles and piles of money. So even though New York City and other big cities in the United States are rich with money, with capital, the mindset in those other parts of the United States is much more conservative. Secondly, even though you may watch American films like The Wolf of Wall Street or the movie Wall Street, so many movies are set in New York, and it positions New York as a center for basically all the capital, the power of the capital. But more than half of the investment capital that goes to growth stage companies and startups flows through Silicon Valley. Okay, so that's on the funding side. There, because we have a limited time here, I'm not going to go through any statistics, but there is a great report you can download for free. It's called the CB Insights Money Tree Report. And there is the URL. I will give you access to that. It will be available to you all after this presentation. Chris, am I being heard okay?
Yeah, you garble every once in a while, but it's okay.
All right. Okay, next is the access to early adopter customers, okay? So if you are a young company or even an established company from Chile or other parts of the world, and you want to enter a new big ecosystem like Silicon Valley, the most important thing for you to do is get your first 1, 2, or 3 customers. And it's hard, it's the hardest thing to do. But the wonderful thing about Silicon Valley is that we have, in addition to some of the largest corporations in the United States headquartered here, we also have innovation offices from more than 400 multinational corporations. And what's unique about these people is they have one job. Their job is to evaluate new innovation. For instance, if you want to do business with Deutsche Bank in Germany, you don't have to go to Munich. If you want to do business at Sony in Tokyo, you don't need to go to Tokyo. You can go to the innovation offices in Silicon Valley because the person you need to meet is the only person that represents the office here. So it's pretty remarkable. So we always tell people, if you want to do business with British Telecom, for example, go to their Palo Alto office. You don't need to go to London, right? We got a great case study. And we keep hearing more of these stories. We did have a gaming company from Japan that we worked with doing augmented reality gaming. And this was pre-Pokemon Go. And they had several refusals from meetings with Sony headquarters in Tokyo. And we got them here at Sony of America in San Jose. And within 6 weeks, they had a proof of concept project with them. So ironically, they needed to come to Silicon Valley to meet with the Japanese, giant. They couldn't do it in their own backyard. So because of this, we have this incredible adopter customers. If we just look.
Estimado
just
lector,
look,
por favor, apagar sus micrófonos. Gracias. Sorry,
if we
Alfredo,
just,
about that.
no, it's fine. If we just look at the telecom sector, for example, we have so many nations represented in Silicon Valley. So Singapore, the United Kingdom, France, China, Spain, Switzerland, Germany, Japan, Korea. And within 2 weeks, you can meet with each of these innovation officers, and the likelihood of you getting a proof of concept project is incredibly high, saving you lots and lots of money from trying to figure out who's the right person to speak with at their headquarters in their home country. And if we look at other sectors, I mean, the list goes on. This would occupy probably 5 or 6 more slides to get all the logos here. But, you know, the automotive sector, financial sector, consumer sector, electronics, the list goes on. You have truly a world of opportunities available to you in the Silicon Valley offices. So moving on to mindset. When people always ask, what is the biggest challenge that companies from overseas face when they try to do business in Silicon Valley? The number one answer, it doesn't matter where you're coming from, the answer is pretty much always the same, is the culture is very different, right? It's part of the mindset. And probably one of the hardest things I had a tough time adjusting to myself and many others is the speed of decision-making, okay? If you in the audience are a later stage company and you have done a big contract in your past, maybe you have had 15 to 20 meetings before you got a contract signed. Maybe it took 6 to 12 months, right? That's typical when we ask this question, how long does that process take in other countries? In Silicon Valley, that can happen in as little as 6 weeks, right? And this is why it's really hard to adjust to this pace. You probably wonder why we have to do the 20-second elevator pitch. Why do we have to do a pitch to investors or to corporates that's 3 or 4 minutes? It seems impossible to tell the business value of your the value of your business in such a short time. It's because often when we are getting these meetings for our startups in big corporations, sometimes the meeting is only 20 minutes. And you think, how can we do anything of value in 20 minutes? Well, this is the way things work here. Big corporate executives and investors are incredibly busy people, and they will make time for you, but very short time. So you really have to be very good at explaining the value you can bring, why it's important to do business together. And it could be as early as 3 meetings that you get a contract signed. So that is a big shift. The other thing is the following up process, okay? If I introduce one of you to a big corporate executive at one of these big companies we talked about, after the meeting, you don't wait 2 weeks to say thank you for a nice meeting. You follow up the same day, right? This is the way it's done in Silicon Valley. And when you do the follow-up, you summarize what you talked about and you discuss what the next steps are, okay? It's the only way that things move forward. Otherwise, you get forgotten. Also, there's another cultural thing. People in Silicon Valley always include speaking with their perceived competition as part of their networking activities, right? In many other cultures, people get quite nervous to talk to their competition. They're worried that their ideas are going to be stolen. But in the Silicon Valley mindset is about the more I share, the more people I share my innovation with, the larger the pie will be, the larger the market will be. And most importantly, the greater the possibility of having potential new partners. Because people in this, you know, there are more than 30,000 startups in Silicon Valley. And chances are among those startups, there could be people that can be perceived as competitors, but in fact, they're likely going to be potential partners. Generally, the atmosphere is people are open to trying new things. They will do it on a handshake, and it's okay if the idea doesn't do well, okay? You basically fall down, you dust yourself off, and you keep trying again because we learn from mistakes. Both Chris and I have had a couple of failures in our experience, and those failures have helped us to really catapult our businesses forward.
Quiero hablar con él antes de mandarlo, ahí se va a acelerar. ¿Estoy bien? ¿Necesitáis cable?
Could you
Marcelo,
please
Vega, te pido por
Okay.
favor apagar el micrófono.
mute yourself, please? Thank you. So just finishing up on the mindset, people in Silicon Valley are always networking, even though we are not physically going to events in Silicon Valley. We're always networking through LinkedIn, through social media, through other means, even through email. It's always important. Now, one of the lessons we've learned from COVID is you have to over communicate to all of your network, your customers, your potential customers, potential investors and partners. You know, as I mentioned earlier, part of the mindset here is we're always open to meeting new people. If you look at the statistics of Silicon Valley compared to the rest of the United States, more than 60% of the CEOs of companies in Silicon Valley are not born in America, compared to other parts of the US where that number is less than 15%. So you're truly a multicultural, multi-national, global mindset in this tiny part of California. We also have this thing called the pay it forward mentality. What that means, I don't know if you have this in Latin America, but it's the idea that the first instinct is to help others even before you get to know them. And the reason why it exists is because the serial entrepreneurs, the successful entrepreneurs in Silicon Valley did not become successful by themselves. They did it with the help of others. So naturally, after they become successful, they're happy to help other people along the way. People also change jobs often, and it's not regarded as a negative. In other cultures, when you change jobs too often, it seems like you're someone unstable, okay? But in fact, it's the opposite here. People are always exploring new opportunities and new things, so they change jobs quite often. Just wrapping up, because I know we're running out of time. This part of the world is, I have never seen the highest concentration of some of the best talent to support startups. If you look at the idea of, you know, people in the audience, you might be in the stage. You might be in the stage where you're growing your business from 0 to 2 million, or 2 million to 20 million, or 20 million to $1 billion. It doesn't matter what stage you're at. There are advisors that are here to help you every step of that growth journey. There are so many people that have done this many times. And as you start to build relationships with people in Silicon Valley, don't be shy to also build relationships with lawyers, accountants, and bankers. It's quite remarkable here. When I was living in Canada, these people were typically kind of boring and expensive and really, frankly, not enjoyable to be working with. They were all transactional focused. In Silicon Valley, they really become part of your business development team, because the only way they become successful is if you become successful. So if you are working, for example, in an e-commerce company or a banking, fintech company, you will find lawyers, accountants, and bankers that focus on those sectors, and they're more than happy to make introductions to their portfolio companies or some of their partners along the way. Okay, so that concludes my session. Okay, I would love to hear from each of you by email, by LinkedIn, or Facebook. I'm happy to connect. And as we build a relationship with ProChile, I hope we have the opportunity to get to know you and help you with your global journey. Okay, so thank you very much, everybody, for your attention. I'm sorry if my internet was not as good as it could be, but here, I'm back. How are we doing for time? Yeah, not so bad. I can take a few questions now, or we can wait until the very end, as you wish.
So should we just move on, Alfredo?
Let's move on. All right.
Do we have any experience with Chilean entrepreneurs? That was that we just got a question in the chat window, Alfredo.
Right. So sadly, we do not. we would love to have that change and start building relationships with you. Now that you've opened that up, at the end of this presentation, we're going to be announcing our very first multinational accelerator program that we're going to be hosting in November. And we would love to work with Sophia and her colleagues to get a few of you to participate in this program. It's going to be 2 months long and going to begin in November and finish in February. So more details on that soon. We have another question. You have a cybersecurity company in Delaware as a possible access Silicon Valley market. Yeah, cybersecurity will continue to be one of the top sectors that investors are working with, but more importantly on the corporate community. All the likes of PayPal, Amazon, eBay, and all the mobile payments companies, they're all interested in fraud reduction and protection from the omnipresent hackers of the world. So yes, cybersecurity remains a very top sector. All right, thanks for your questions, Chris. Let's move over to you.
Great, thank you, Alfredo. So where is my PowerPoint? There we go. So part of what we wanted to talk about today was the idea of creating a global growth mindset. One of the differences that Alfredo and I have seen around the world is that entrepreneurs outside of Silicon Valley don't think the same way typically about growth. Their expectations of growth, what does growth mean to them, is a lot lower. It's a lot slower than what we see in Silicon Valley. So we took some time to collect some of what I would consider to be the best practices of hypergrowth companies and want to share with you some of the characteristics of how these are different. So the very first thing you've got to do is you've got to understand that a scaling company, a scale-up, is different than a startup. Steve Blank, sort of the godfather, if you will, of the lean startup movement, has the definition of a startup that is a temporary organization designed to search for a repeatable and scalable business model. You notice that a startup is looking for something that scales. A startup is not scaling. So it's really this two-step process. Well, it's more than 2 steps, but it's a multi-step process. But first you have to find that repeatable, scalable business model, and then you have to figure out how to scale it. So one of our colleagues, Bill Reichert, who runs Garage Technology Ventures with Guy Kawasaki, explained it this way, that the difference is that a scale-up is an organization that is focused on generating extraordinary value through rapid growth. So what do we mean by that? What does this look like? So if we look at doing this, the good news and the bad news. The first is that doing a startup is really hard. It's really hard work. I've done it multiple times. I've also had a number where it didn't work. Alfredo is a serial entrepreneur. Doing a startup is hard. Scaling locally, so scaling inside Chile, is harder. It's actually harder to scale than it is to start. And if you want to look at what it means to scale globally, that's even harder still. There is a saying in the US military special forces community that yesterday was the last easy day. When you're doing a scale up, it often feels that way, that yesterday was the last easy day. The set of challenges you're facing are extraordinary. So one of the other things that we see as a difference between what's happening in Silicon Valley and happening in the rest of the world is the speed at which companies start to grow is so much faster. If you think about a seed round of investing as being the money that you receive to sort of finish building your product and go get those first customers, we see companies in Silicon Valley going from that seed round to an A round, which is typically the money that you get to figure out how to create a repeatable sales process. They're doing that in 10 months. And if you look at the time from an A round to a B round, which is the time from giving you the money that says, all right, now go figure out how to sell, to the B round being the money that you receive. It's like you figured out this scalable, repeatable sales process. Now here's a big pile of money. Now go scale. They're doing that in under a year and a half. So from being given the money that says, here's the money to finish the product and go get your first customers, to here's the money to allow you to really drive aggressive growth, is right at 2 years. What we see in other parts of the world, and I don't have good data from South America, but what we see from Asia, from Europe, from Eastern Europe, from Africa, is that that's typically from seed to B in those parts of the world is roughly 5 years. So the Silicon Valley companies are moving at roughly twice the velocity of somebody else. And this is really important, that if you are going to compete on a global scale, you are inevitably going to encounter a Silicon Valley competitor. Because if you have identified a real problem with a real global market, so there's a bad problem, there's lots of people around the world that have the problem, there are going to be competitors. And one of those competitors is almost certainly going to be from Silicon Valley. So they are going to be trying to grow at twice the speed that you are probably trying to grow. And if you let them grow at twice the speed, they will eventually kill you. It is really a harsh reality right now that is you need to either figure out how to scale rapidly. This is if you're going to scale on a global basis, but scale rapidly or die locally, because eventually the people who are raising all of this money are going to show up, and unless the government protects you, they will eventually come to your own market and you will be driven into a smaller and smaller space. If you look at the idea of a unicorn, which Alfredo introduced before, which are these companies that are getting to $1 billion in valuation. Redpoint Ventures did a study a number of years ago that showed the amount of time it was taking to get from seed to $1 billion. If you go back to the dot-com bust, sort of early 2000s, you know, it was in the 5 to 10 year kind of time frame. Companies today that are being hyper successful on a global scale are doing it in 2.5 years. Again, there is this notion of growth at speed, which is very different if you want to play on a global basis. So how fast do you need to grow? How fast is this that you want to be able to do this? The very best companies in Silicon Valley are scaling at a frightening speed. During their early days, some of them were growing at 10 to 25% per week. This is not 10 to 25% per year, not 10 to 25% per month, 10 to 25% per week. The norm, if you want to be investable in Silicon Valley, is you have to show that over the next couple of years, you have the potential to scale at between 20 to 25% per month. You don't have to be at 25% per week, but if you have a growth trajectory of only 5% per month, honestly, you're not interesting to Silicon Valley investors. So you've got to think differently about what does growth mean. So let's look at what some of these growth curves have looked like. If you look at Quora, In January 2010, Quora had 1,400 registered users. 1 year later, they had 400,000 registered users. 37,000% growth in 1 year. You look at Uber. This is the number of drivers Uber had around the world. You go back to July 2012, Uber is just getting started. You go 3 years later, Uber is north of 150,000, more than 150,000 drivers. So this is not let's grow at 5% per year. This is not let's grow at 10% per year. This is Airbnb. I did put in some little data points on this graph. Airbnb is one of my favorite stories because these folks were so committed to the company that for a while they were selling boxes of cereal on the street corner. They got into Y Combinator, and one of the things that Y Combinator drilled into them was this idea that you want to grow, and grow some more. And in 2010, they figured out a way to leverage Craigslist to be able to get more listings. And then in late 2010, what they figured out was that people didn't want to stay somewhere if they didn't really know what the place was going to look like. And so they actually hired professional photographers to take photographs of the properties so that the listings looked more like a hotel room listing as opposed to just some random photograph taken on a cell phone. And that was the feature that actually sort of allowed them to take off. But look at the growth curve in terms of going from a very small number to just millions in the course of 18 months. So to get this kind of exponential growth requires a lot of change. It requires an amazing amount of change in you. You as the founder fundamentally have to change how you think about the world. You got to change your mindset. You have to start thinking about growth as different. You have to start thinking about growth as being something that is much more dynamic and aggressive. You have to change your approach, the tools that you use. You're often going to have to change the composition of your team, and you need a strategy. So we've tried again to take all of these best practices and pull them together into a strategy for exponential growth. And I want you to walk you through the elements of this. The very simple way that we think about it is think big, start smart, and scale fast. So what do these elements look like? At the beginning, you have got to change how you think. You have to have an almost fanatical commitment. Actually, not almost. You have to have this just passionate, fanatical commitment to growth. When you wake up in the morning, you have to ask yourself the question, how are we going to grow? While you're eating dinner, you ask the question, how are we going to grow? You have to be just focused on it. During the early stage of a company, you have to be focused on product. How do I build a product that is going to absolutely delight customers? How am I going to build a product that is going to make people want to just buy it, that the demand is going to come in? But once you have found the product that customers love, you need to shift from making a better product to growing the company. You also have to change your view in terms of who is responsible for the growth of the company. This is a picture of Google. This is every employee in Google in 1999 in front of Google's lovely headquarters. And you can see their highly expensive Google sign, right? So why am I showing this? Because during the early days of Google, The leadership team instilled in everyone the idea that helping Google grow was absolutely everyone's job. Everyone had to be fanatical about growth. It wasn't just the sales team. It wasn't the marketing people. It wasn't the CEO. It wasn't the new word is the revenue team. It wasn't just those people. Everyone needed to be involved. And there was an employee number 9, Salar, who actually came up with the idea. Well, he actually borrowed the idea in typical Silicon Valley, see somebody else doing something and say, hey, we could use that idea. But he's the one who brought forward inside the company the idea of AdWords. Salar was on the operations side. He was basically one of the finance team members. He was not the sales manager. He was not the VP of marketing. He was not the CEO. Google became what it is today because Salar believed that it was his job when he woke up in the morning, not just to go in and work with spreadsheets, but to figure out how to help the company grow. It also means you've got to change your growth expectations. As I showed before with Airbnb and Quora and Uber, this idea is you have to find a way to grow. And if you don't feel like you're just on the edge of out of control, you're probably not growing fast enough. The safe, slow, methodical approach to growth is nice, but it's not what gets you there. If you think about like SpaceX, SpaceX could have spent 20 years trying to engineer how do you land the booster. SpaceX's way of doing it was, we're going to launch a rocket into space and we're going to try to land the booster and we're going to watch and see if it works and if it doesn't work. And yeah, we're going to crash a bunch of them along the way, but that's how we learn fast. Companies that are successful at scaling push the edge. They're just on the edge of out of control, but they're also learning really fast. So what's a good model for thinking about growth? Ash Maurya, who teaches at Stanford, among other things, has written a bunch of books, one of which is Scaling Lean. He looks at it this way in terms of, you ought to, in the first 3 months of your sales effort, not the first 3 months from founding the company, but from your first revenue, you ought to, in about 3 months, be able to drive to about $10,000 a month in revenue. 1 year later, you should be at 100,000. 3 years later, you should be at $1 million. That's $1 million a month. That's a $12 million a year run rate. 3 years. From first dollar to 12 million a year. So how do you get big fast? This is really about exponential growth. Why am I showing you this chart? And as Alfredo said, we're going to distribute this. But I showed a calculation where here, the difference between 5% month-on-month growth, 10, 15, 25%. If you started in Q1 of this year and you had 1 unit of revenue, let's call it $1 or $1 million or $10,000. At a 5% growth rate, in 2 years, you would have roughly 2.7 times as much revenue on a monthly basis. If you're growing at 20 to 25% per month, you would have between 46 and 100 times the amount every month in terms of revenue. Do you want to be on this growth curve, or this growth curve? This is why the investors care about what your month-on-month growth rate is, because they want you at least on this growth curve, and they really want you on that growth curve. The next step of thinking big is to create what the business school people would call your big, hairy, audacious goal, the BHAG. The BHAG is this North Star for you. It is the incredibly ambitious growth goal that helps you think about and guide and design how your company is going to be. So let's look at a couple historical examples. One of my favorite is Walmart. Walmart in 1990 had revenue of $26 billion. Walmart today is the largest bricks and mortar retailer in the world. Today, I don't know what the number is, but they set a goal of having 125 billion in revenue 10 years later. Think about that. You're at $26 billion a year in revenue, and you want to grow your revenue 5x over 10 years. This is not just steady incremental growth, grow by 10% per year. This is about finding ways to create explosive growth. Boeing set a BHAG in 1950 that they wanted to be the dominant commercial aircraft player in the world in jets. In 1950, there were no commercial jets. There were only military jets. But Boeing said, we want to become the #1 player. They ultimately did that. Obviously, Boeing is struggling with some issues now, but they certainly achieved the goal that they set out, which was to achieve this position of prominence. So from my own experience, I was one of the people that co-founded a company that today is known as Avanade. Ultimately, Avanade was bought and became a wholly owned subsidiary of Accenture. But if you go back to 1999, when we were creating the company, when we were thinking about the company, what was our BHAG? The reason you do this is that it shapes everything that you think about. Because our BHAG was we wanted to get to 500 million in revenue in 5 years. And having that audacious goal, that big goal, changed all of the decisions that we were making. I guarantee you that if we had set our BHAG at $100 million a year, we would have made different decisions. We would have made different decisions about when we went global, how we went global, how fast we went global, how much money we were going to raise, the kinds of people we needed to hire, when we needed to hire the people. Now, 5 years later, we were at about 450 million in revenue. We didn't quite get to the 500 million in revenue. It took us 6 years, not 5 years. But I guarantee you at year 5, if we had set the BHAG at 50 million, 100 million, there's no way we would have gotten, to 450 million, because we would have made different decisions. We would not have raised as much money. We would not have hired at the pace that we hired. Having this big goal changes the way you look at the world, how you make decisions, and how you act. So we actually sustained for about 5 years an average of about 30% month-on-month growth. And it may not look like much. If you look in the early years, that sustained growth, we started with our first revenue was in March of 2000. We got, woohoo, $5,000 a month. By the end of February 2004, we were in 36 million a month. Actually, this is 2005, not 2004. I apologize. I'll have to fix the slide. So we were at over 400 million in an annual run rate. And it's because of this compounding effect that when you start to get to bigger numbers, this gets big really fast. But it's the decisions we made here that enabled this to happen here. So one of the things we'll do is we'll find a way to distribute. Actually, you can do this. It's not a hard spreadsheet. At some point, take 5 minutes and map out your revenue over the next 5 years and play around with the month-on-month growth rates. It's really simple to do in Excel. But what I want you to do is take a look at how, how this is going to change what you do. So if you start smart, one of the things that you need to do is take a look at your team. Unfortunately, almost every startup is understaffed in terms of sales. You don't have enough salespeople, you don't have salespeople with skill, which is understandable because when you were a startup, not a scale-up, you were focused on building product, not about scaling sales. But there's this fundamental shift that you have to make, which means that you're probably going to have to add sales talent. The other thing that we see is that most startups, can we get you to mute your microphone, please? Most startups do not pay enough attention to what we would call the customer journey, which is not just the experience of the customer using the product, but everything from your first interaction with them all the way through supporting them. Because the way that you sustain growth is through delighted customers and by optimizing the process of onboarding them and optimizing the process of retaining them. We also see that there is this new thinking in terms of being able to think about, excuse me, you need to think differently. This goes back to what I was talking about in terms of that you need to have everyone in the company thinking about how is it that you drive sales? How do you drive growth? You need to think about revenue. You need to probably do away with the blend between sales and marketing. And you also want to look at customer success. It's not just about enabling support. It's not just about reactively answering people's questions, but proactively, how do you let them work on the product? How do you help them be successful? So when I talk about this, meaning everyone, I do mean everyone in the company needs to be part of the process. You have to be able to have every single person be able to pitch the company. You don't want to have people who don't view it as their job to sell. If they can't pitch the company, if they can't do an elevator pitch, if they can't give a 4-minute description of the company, they're not going to be able to help you sell. You want everyone all the way to the receptionist to be able to help you sell. One of the other things is that in Silicon Valley, we tend to give everybody stock. In my last company, everyone who was hired in the first 3 years got stock in the company. And I'm not talking just one share. Why? Because if you are an owner of the company, it changes how you think. It changes how you behave. I am an owner of the company, and as an owner, I have an obligation to help grow the company. I have an obligation to help sell. It's also very common for every single person in the company to receive a portion of the sales commission. That if everyone in the company is a salesperson, everyone needs to be compensated for helping sell. That if I'm the receptionist and I bring in a deal, I find a customer and the customer buys from us, I need to be rewarded for that behavior. You want to reward the behavior of every person that drives for sales. So we talked a little bit ago about the out of control. Your competition is scaling fast. You need to scale fast. As I said, you need to scale at the speed at which you feel like you are just a little bit out of control. So another exercise I want you to do is I want you to stop and I want you to think about where your company could be in 5 years to set this BHAG. You don't have to know where you're going. You don't have to know exactly how you're going to get there, but it does need to be measurable. It can't be, we want to be big, we want to be dominant. You want to have a goal that you can set that is actually, you can say, did we make progress towards it or not? And what I want you to do is I want you to find 2 other entrepreneurs. And I want you to share with those 2 other entrepreneurs what your big, hairy, audacious goal is and why you set it. Part of the reason I want you to share is because it then makes you more accountable. Once you have shared with other people, you have a higher degree of obligation to yourself. It's like, well, I told them this is what I'm going to do. I want to do it. But it also gets you used to the idea of communicating, not just to your employees, but to everybody around you, what the goal is for your company. So I'm going to end there. Wanted to leave enough time for some questions. As Alfredo said, please join me on LinkedIn. Please connect with me. What happened there? And when you connect with me on LinkedIn, that's my little LinkedIn QR code. Just please tell me that you were part of this webinar. I get a lot of requests from people all over the world to join me on LinkedIn. Just make a mention of the fact that you were on this webinar so I know that we did something together. I only connect with people on LinkedIn that I've had some kind of interaction with. I don't accept sort of blind, blind requests. And I'll leave it now open for questions. If anybody has it, you can use the chat window, or if you want to unmute, that's fine too.
Chris, we do have some questions in the chat.
Great.
First, there's
Yeah,
a few.
I can pick it up.
There's
Okay.
one in Spanish, so if you want to start with the first one, and then once we come to the one in Spanish, I can translate.
Sounds good. So yeah, one of the questions, can you hear me okay?
Yeah.
Okay. One of the questions was about how do I begin the process of getting attracted to investors. He's in the process of building his brand in cybersecurity. So, the path to getting interest from an investor, you have to begin by getting customers in the US first. As you can imagine, among 30 to 40,000 startups in Silicon Valley, many of these people are your competition. So it's the investor community here is easy. They have an easy time accessing very talented companies. So in order for you to stand out from the crowd, you need to at least have some American customers because they typically will not invest in a foreign company. So those are the prerequisites. And then we encourage you to start building relationships in the cybersecurity industry or whatever industry sector you're focused on as early as you can, so that when you are ready to raise money, you already have those relationships in place. We can help you more on that. In further detail, we can exchange some emails or LinkedIn, okay? Chris, did you want to add to that answer?
I mean, the really simple thing that most people don't understand about investors is investors invest in 2 things. They invest in people. Alfredo and I were in a conversation with one of the partners at the Mayfield Venture Fund, which is one of the best early stage companies in Silicon Valley. It talks about founder first. And the reason is that we know that as investors, we know that you don't know everything right now. We know that the plan that you have is going to be different a year from now. What we want to know is whether or not you are the right people to make the plan. So Alfredo, you're, at least on my screen, something went a little bit crazy. There we go. The other thing that investors invest in is they invest in growth. They want to see that you have figured out an opportunity, that you are exploiting an opportunity that is going to allow your company to grow at this 20 to 25% per month rate. If you go to the investor and you tell the investor that my plan is to grow 5% per month, they're not going to be interested. So figure out, as part of the story you want to tell the investor, how you're going to grow. It's not I have great technology, it's not I built a great product, but tell them how you're going to be able to grow at a crazy rate.
Very good. One of the other questions we had is, how do we think the advantages of Silicon Valley will adapt to the COVID conditions? So if I understand correctly, you're asking about how the opportunities for foreign companies will change due to the COVID. You know, there are some things that we cannot control, like the destination itself is not what it used to be. Many buildings are 30% full, not 70% empty. Restaurants and bars are not really what they used to be, etc. Those are obvious things. But the business side keeps going. People want to keep doing business. And this is why now is the time to, if you do not have sales and marketing staff, you have to get some of the best people in sales and marketing and amplify your activities. Now is the time to be heard, because we don't have the advantage of going to one of the big conferences like TechCrunch, Disrupt, or RSA, or Game Developers Conference, etc. Okay, we need to do it all online. Okay, we have another question, Chris.
I just want to add on that. I mean, at the end of the day, all of the resources in Silicon Valley, even with COVID, still have an obligation. They have a responsibility to find good investments. The innovation teams have a responsibility for finding innovation to be able to bring into their corporations. I do think that COVID is going to make it easier for companies and individuals who are not in Silicon Valley to interact, because it's going to train the investors, it's going to train the innovation officers to do more stuff remotely. But it's also going to make it harder, because building relationships over Zoom is a lot harder than being able to build relationships in person. And so it's going to require a much more conscious thought if you're not in Silicon Valley. But even if you are in Silicon Valley, everybody is going to have to become more conscious about actively building relationships, as opposed to the way it used to be in Silicon Valley pre-COVID, where there were lots of just sort of accidental meetings.
Chris, do you want to take the question on experience about exponential growth for the industrial sector? Is there a barrier?
Scaling services companies are hard. I don't care what sector it is, because for the most part, a services company requires you, in order to scale, requires you to add people. And adding people, you can typically only add experienced staff so fast. The key that I would look to as I think about how do I try to expand and scale a services company is, how can I find some kind of technology that is sort of a technology accelerator of the services that I provide that allows me to be differentiated. So many people just try to compete in services by saying, we're smart and we're cheap. Well, there's thousands of services companies out there that are claiming that they're smart and they're cheap. You need to find something that is going to differentiate you in terms of being able to deploy people and have them work more efficiently, not just cheaper.
Good point. Blockchain and sustainability. Every time I contact the innovator manager of a company, they don't care about sustainability. they don't want to talk to us. That's a good point. So, so Silicon Valley, it, you know, historically has been all about making money, and I agree. America in general, the number one topics were very rarely sustainability and the environment. Things are changing though. Silicon Valley, we've seen a growth in venture capitalists and angel investors that care about social responsibility, social matters, environmental matters, sustainable matters. And there's a list of funds actually that we learned about last night, didn't we, Chris? So,
Yep.
IndieBio, the Drawdown Fund, and
GBL, double bottom line.
Double Bottom Line. These are, and actually now the Mayfield Fund is focused on investing in things that make society a better place. So, you know, let's connect after this talk, and we can give you a little bit more information on that. Okay, another question. What can we take from the South American way of business that can help us thrive in Silicon Valley? Not sure how to answer that one.
Yeah, I've had experience across a lot of South America. The thing that I would say, you do have to adapt your style of business to whatever country you're going to be working in. We do a whole talk on sort of cross-cultural business, but relationships are important no matter where you are in the world. And relationships are really important in Silicon Valley. And people from South America tend to be very good about building interpersonal relationships. And I would leverage that ability to sort of make human connections, because in the end, you know, one of the things we were talking with the partner at the Mayfield Fund about last night was he said he cannot remember the last time they made an investment that was not the result of an introduction. That someone they knew and trusted introduced a company to them. That is all about having a relationship. And, you know, I look at the next question, which is, or follow-on question, which is building relationships. Do you have a must-do list? You need to find, first of all, the way to get introduced. That you need to find someone that can introduce you to the person you want to build a relationship with. But most importantly, you want to take the time to figure out what do they care about. A relationship needs to be beneficial for both parties. If you just show up and saying, I want, you're not going to be able to build the relationship. But if you ask the question, how can I help you? How can I help you be more successful? Can I introduce you to some people in Chile? Can I introduce you to some people at, you know, the largest bank or whatever? You need to find a way to give as well as get.
Yeah, and on that topic, we actually, it is hard to do it if it's not part of your culture and not part of your own ecosystem. We understand that. It certainly wasn't easy for me coming from Canada, raised by Italian immigrants. Networking Silicon Valley style is an art and it's a science. So we teach 3 separate workshops that give you all of the how-tos on how to do this. So I cannot risk the urge to say that if you take part in our accelerator program, you will have all those tools. And, you know, let's find a way of making that happen. Okay, query about thinking big. Yeah. Where's the light switch, Chris, that helps me to think big?
You know, the thing is that there is no right growth curve. When I talk about this 20 to 25% growth on a month-on-month basis, that's a general rule of thumb. If you're doing hardware, the expectations are not quite as high. Hardware investors understand that the growth curve is a little bit longer. But the question in terms of thinking big is set a goal and then really work on how is it that I can get there. But one of the ways to do this is to work backwards. So if I use the example from Avanade, where we had that $500 million goal, we said, well, if we want to be 500 million in 5 years, then in 4 years, we want to be this big. In 3 years, we want to be this big. In 2 years, we want to be this big. And then you figure out what you need to be doing to not only get to the next goal, but to be ready to get to the goal afterwards. You don't want to just be planning one goal ahead. You want to be looking 2 or 3 goals ahead, because sometimes I need to make a decision today that is going to affect my ability to make the goal 3 years from now. So you can't just build from where you are forward. You need to look at that entire growth trajectory over a 4 to 5 year period, so that you're making the right decisions today that position you correctly in year 2, 3, and 4 to get to where you want to be in year 5.
In addition to that, since you're in the hardware sector, there are actually 3 accelerators in Silicon Valley that are focused exclusively on hardware. And I would encourage you to build relationships with them. Just, start getting to know them, because it's an entire different kind of business value chain and ecosystem. And I think people in that kind of sector help each other. So I think you want to be part of a community like that. Anyway, it looks like we're getting close to the end of our time, but we can still take one or 2 more questions. We're delighted to see so many participants taking part in this session. And, thank you to Sophia and Itziar for putting this together. It's been a real pleasure. We honestly cannot wait until we can get back on airplanes so we can visit you all in person. Everything is just better in person. Chris, you had some wonderful experiences skiing in Chile. I envy
Yes.
that.
Yes.
Be nice to know how many of you in the audience have been to Silicon Valley before. Yes. Okay, we have one more question. Technology in the mining industry, does it sound attractive?
So again, it comes down to what is the opportunity. There's always opportunity. It's not about what is the industry. There's opportunity in every industry. Around the world, mining companies spend billions and billions of dollars on equipment, on technology, on seismology gear, on drilling equipment, you name it. The question is, what is the actual opportunity within the mining industry? And how much better is your solution than the existing solution? That if you think about, I'll use an example, it's not from mining, but it's from the oil industry. The oil industry uses seismology to be able to see, we think that there is oil under the ground here. This would be a good place to drill a hole. Well, if you're just 1% better in terms of figuring out where to drill the hole, that's probably not interesting. But if you can double the odds of success of finding the oil, well, every oil company in the world would be lined up at your door to get access to the technology. The question is not, is the industry interesting? It's, have you found a way to create exponentially greater value for your customer? Why would the customer want to buy your technology as opposed to what they're doing today? There's all kinds of opportunity. For a long time, Rio Tinto out of Australia was one of my clients. These guys spend billions of dollars. There's plenty of money. It's about very explicitly, what are you going to do for them that is going to help them make more money? Same with health tech. Massive opportunities. There's not a question of any industry. almost every industry is interesting. The question is, what is it you are going to do that is lots better than the existing solution? Not 0.00001% better, but 5 times better, 10 times better than the existing solution.
I'll make a comment on the healthcare side is that, you know, COVID has disrupted a lot of the industry, in some ways really good, in some ways really bad. On the bad news side is the fact that American healthcare is very different than it is in other parts of the world. So there's actually a lot of hospitals that are going to go bankrupt, a lot of industries that typically in other countries will not be affected the same way. On the other side, the amount of research that's going into to create vaccines and so on, anyone who's on that value chain is in a growth area. However, it's also got its set of challenges. So it's you know, the short answer: American healthcare system is very complicated. It's unlike any other part of the world because there's no universal healthcare. So, you know, that is the broad answer. Okay, so I know, Sophia, you said you wanted a couple of questions in Spanish to translate. Now would be a good time to do that.
Yeah, Alfredo, we do have one, I think it's just one question in Spanish. I'm browsing through the questions to just get to that one. Give me just one sec. Okay, here. So it says that Cobrotech, it's not already in the scaling phase. They are still in the forming stage of networks and alliances. And they are wondering, how can you add in this part of the process that it's building the networks more than scaling, and if there's an associated cost to get that service?
So they want to know if they can hire people to help them.
If you guys can help them on a stage where they are not already scaling, but they are creating the networks and alliances in order to scale in the future, and they want to know if you have that kind of support and what would be the cost of that support.
Okay. Yeah, I mean, we certainly, it's part of what we do in all of our accelerator programs. About 80% of the work that we do is with cohorts or groups of companies. And then the rest is with individual companies. So we would be happy to take a look at your specific situation. And, you know, we don't have any fees that we can just quote because they vary depending on how many people are working on your behalf. But yeah, certainly about 20% of our success stories are working with independent companies. So we would be delighted to get to know you and your company.
Excellent. So in that sense, what we can do is if anyone wants to connect directly with you guys, what we can do is they just can reach out to XVIII. Well, they can reach out to you directly. You already gave your email, but yes, if they also want, they can reach out to XVIII or to me, and then we will make the intro.
Yep, happy to do that. And please, again, as Chris said earlier, we get contacts every day from different parts of the world. And it's good if you could just say, I was part of the webinar on April 26th. That's way we could make a direct connection. Thank you for that. We have one last question. I got funds for a video game that contributes to children's health. So I'm assuming you have funding and you're making a video game for children's health. How can I access the accelerator? Okay, so yeah, so I'm going to be following up with XVIII and Sophia after. And we have lots to talk about. We would love to find a way to make things work, get some of you accepted into the accelerator. It would be the most fun. This is going to be, we're going to accept up to 96 people to participate from all over the world. We're creating also peer-to-peer groups so that you can find people among the participants to communicate and help each other as part of the accelerator solution. So it's the first time we ever do this because nobody is traveling and you can only do it online. So we're very excited about it. And let's hope some of you can be part of it. So Sophia, XVIII, thank you very much for the opportunity. It was really nice to see so much participation and questions. What you saw today was a tiny portion of the 2 weeks boot camps that we usually do. Workshops and mentoring sessions are combined together, and we give the participants basically everything they need to learn how to launch into a global market. So thank you again for the opportunity.
Thanks to you and Chris, Alfredo and Chris. I think this was a great session, and we really appreciate you sharing all these very crucial insights for Chilean companies that want to expand to Silicon Valley. I also want to thank the team at ProChile and all the participants for joining us today, and of course to invite all of you to reach out. As Alfredo and Chris already said, you can reach out to them directly. We will be happy also to make the connection, and if you need more information, just feel free to reach out. We will be sharing the video and the presentation afterwards, and of course, if you have any questions or if there's anything you need from our side, the innovation department is here to help. So thank you again, Alfredo, Chris. Thank you, of course, to ITSIAR for managing all the session and setting this up. And I think we are all set for today. So have a great day, everyone.
Thank you, everyone.
Thank you. And let's reserve a pisco sour for me and Chris when we come to visit, okay?
Yes,
right.
let's make a promise now that next time we will be doing this here in Chile and with a pisco sour with all the participants.
Great. Thank you.
Thank you.
Have a great
Bye-bye.
day. Bye.
Thank you.